Hi everyone, I'm going to talk about a trade that I took during the Tuesday market session, and this was a long call position taken on the B shares of Berkshire Hathaway. So the ticker is BRKB. I'm sure many of you are very familiar with this company. It is the investment company of Warren Buffett. Well, I had intended to do this video at the point of taking the trade. However, there seems to be some issues going on in Morningstar. I'm unable to open the full key ratio information. I tried creating an account to see if that helped, but as you can see, they are having some issues right now. So I'm just gonna wait a couple of days. Hopefully this will be resolved. But in the meantime, this sort of like minor obstacles shouldn't set us back. It shouldn't stop us completely. So there are other ways you can find information needed. So right off the key ratio overview, we can see the debt to equity ratio. That's one of the factors that I look at, and you can see that it is way below the 2 that I normally look at, and it's also below the average of this particular company. So that is one factor that's already taken care of. Okay, we can also come to financials, and under financials we can see some of the information that we look out for. For example, we can see operating cash flow positive and increasing. We can see that free cash flow, we can also see is positive and increasing. So this information, we can still see it even though it's a bit limited to like only the last 3 years, and we kind of have to look a bit more for the information. For the income statement, I will use another source. I'll come to that in a bit. Valuation, we can see that the price to earnings ratio, the 5-year average is 22.82 and the current is 6.45. So actually the current price to earnings ratio is below the 5-year average. So this is just another place that we can see this information. Okay, with regards to financials, I'm going to actually go over to another free site called Yahoo Finance. So on Yahoo Finance, under this tab financials, you can actually see a little bit more information, but I think the key thing is we can see the TTM, which stands for trailing 12 months. So essentially it is the numbers from July of 2020 to June of 2021. Okay, so when we come over to take a look at this income statement, we see that in 2020 they actually didn't do so well, but in the trailing 12 months they've actually picked up and it's actually exceeding the previous year's revenue figures. So yeah, revenue is positive, increasing. Net income is also positive, increasing. We have had a few bad years, but as you can see, it's already picked up in the last 12 trailing months. We can calculate the net income margin. The net margin figure that I usually use is a figure of 10. Basically, all we have to do is take the net income figure divided by the revenue. So net margin, the formula is just the percentage of the net income from revenue. So let's just do a quick calculation. Copy this, paste that into the calculator, and you divide by the net margin figure is 28. So that's above the figure of 10 that I'm looking for. So even in the year that they didn't do so well, the net margin figure was 15. So even that is still above 10. So when it comes to interest coverage, remember it is the net income, essentially is the earnings divided by the amount of interest that they need to pay. So interest coverage, we take this number again and we divide that by the interest expense, get a coverage of 25, and that's more than sufficient. So all the figures that we look at, essentially we see revenue is increasing. We saw that cash flow, operating cash flow increasing, free cash flow positive and increasing. Net income, we just calculated the number to be 28 and the interest expense to be 25. So fundamentally wise, seems like this company is sound. We come over to the chart. This is the price action in the last 1 year. As you can see, it has sort of made a retracement in the month of June, along with many other financial companies. From a long-term perspective, it is in a multi-year uptrend. This was the COVID period. The trade I took was to go long on a call option at the strike price of $275, which was during the Tuesday market session. It was the first strike in the money with the time to expiration that is slightly over 1 year. So let's go over to our trading platform. So I want to share about this particular tool over here, which is called the open interest. What this tool tells us is current open positions in the various options. And the top part is the call options, the below is the put options, at various strike prices. So as you can see, the call option, basically from both calls and puts, the option with the most open interest is the call option with a strike price of $290. There's 11.2 thousand open positions. The most open interest positions are actually call options with strikes at 280, 285, 290. That it isn't. So this tool shouldn't be used in isolation, and definitely should not be used as something that is a definite signal of anything. But it just tells me that a lot of people are interested in the option prices that are in this region. So many people have bought the call option at the strike price of $290. Why would they buy the call option there? Because it is close to the all-time high of this particular stock. So if a lot of people have bought call options at a strike of $290, and right now these options are out of the money, then in order for them to profit from their position, they would be expecting that the underlying share would go above $290. So this is sort of like just gives me an indication of what the general people in the market trading options think the price may go to. Obviously, it is not a 100% guarantee, so it should not be viewed as such. So for this trade, I took the September 16 option. There's 428 days to expiration. When I took the trade, it was 430. I took the 275 call, and so just to show you how it works, you click on the ask price, and then you click on profile, and we can take a look at the profile of this particular position. So at the point of expiration, if the price of Berkshire Hathaway is $275 and below, my loss would be the maximum loss, and the maximum loss is the cost to buy this call option today. At expiration, Berkshire Hathaway has to be above around $307.25 for this particular position to be making money. But anywhere above that, it'll be making money. So the maximum return is infinite because Berkshire Hathaway can literally go to infinity and beyond. As you can see, the A shares are worth $500,000. Obviously, we don't expect that in a year from now it will be $500,000, but really nobody knows. So the theoretical maximum return of this position is infinity. So to enter this position, you will just need to put in your price and then submit your order. I'm not going to do it now because I already did it in the Tuesday market session. Okay, so that is all. I hope that this video gives you some idea of how we can get around, in the event that like sites like Morningstar doesn't work. There are other ways we can still do our analysis. Basically, the important thing is just knowing what it is that you're analyzing. Secondly, we looked at open interest and how it can work as an indicator, but don't use it by itself, and how I've put this particular trade in Berkshire Hathaway. Thank you very much for watching. If this video was helpful for you, please like the video or subscribe to the channel. And if you have any comments or feedback, please leave it in the comment section below. So thanks for watching, and I will catch you guys again soon.